What's up, guys? Welcome to a new video. My name is Joop from the Clips, aka Macaroni with the Cheese, and today, Sunday, 7 January, I got a brand new video for you guys. With that being said, let's get started. So the S&P 500 had a pullback, as you can see, for the month January, and we had an NGS rally. And we went all the way up to 47,000. But then on the first week of January, the big guys basically sold all their shares because they want to avoid tax. So I made a line, left is 2023, right is 24. And they basically made a big tax decision not to sell in the end of 2023, but they made a decision to sell in the first week of January 2024. So that's basically made a great pullback. But the next thing that I want to share with you guys is the program that I'm going to talk about today. We're going to talk about the pullback, the NGS rally, why the big boys sold, Mara coin, Tesla, Magnificent 7. We're all over the place today. It's going to be a short video, around 50 to 20 minutes, and there's basically the subject that I want to talk with you guys. We got the Fed inflation rate, we got the Fear and Greed Index, and we got Netflix. And what have you learned of 2023? So as I said before, the big reason why we are basically in the red is because the big players, they made a decision to sell in the first week of 2024. They basically didn't want to handle with taxes, so they was like, yo, we're gonna figure it out next year. So that's the big reason why we have a pullback, a short pullback, not too much, because we were a few weeks in the green since October 2023 last year. And as you can see, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of green, and now we're in the red. We could see some lower levels for the S&P 500 around 4,500. That would be great. That will be good, because we need a pullback to continue. Because at the overall market, I'm still bullish. I do still think that we could reach some higher levels, but when we have a pullback like this, a few percentage, that's always good. But before I continue, we have to start with the global recession that those guys are pretty much were expecting. I cannot emphasize enough how important it is to do your own due diligence, because those big players, those big hedge funds with their assets under management, they're also not know what they're doing. They have a lot of money, but they still figure it out. So it's always important to do your own due diligence. As you can see, this article says why a global recession is inevitable in 2023. And as you can see, we had not have a recession. So I cannot say it enough. Always do your own due diligence. Don't listen to those big players. We got a new article. One of Wall Street biggest bears says a huge crash is coming as market arts in the biggest credit bubble in history. Man, I didn't have seen no recession, but keep that in mind. They still have a lot of money. They still have a lot of influence on the market. As you can see, they basically sold in the first week to get a little pullback, but to avoid tax for 2023, they'll be like, yo, we figured it out in 2024 later on this year. But that's the reason why they sold. And I sold a few shares of mine too, because I can buy back. But what have been happening the last year is that we got big players like the Magnificent 7 are basically leading the market. We had big inflation. It was around 9-10% in mid 2022, and they were like, yo, the big players are basically leading the market, talking about the Meta, Amazon, Apple, Microsoft, Google, Tesla, and Nvidia. They was leading the market. Everyone put their money there. It was basically a safe bet. And those small players, they basically were left behind. So this time of the year, people are basically taking their profits of those Magnificent 7, and they basically are planning to invest their money in those small players, small caps, because there could be a little pullback, talking about the Magnificent 7, and people are taking their profits and they are now shifting to other sectors. And those other sectors are XLV, health, utility, finance, energy, and stables. Because I have a chart in front of you that's basically the ETFs of those sectors, and the number one leading for last year was Meta. Meta was the one leading. It did big numbers all the way from $80 to now $350. So Meta was a big player. Around October 22, it was around $80 and made a run in less than a year. Now we're back in 350. So Meta was one leading of the Magnificent 7. It did it pretty good, and it have to cool off right now. Maybe should continue, but keep in mind the Magnificent 7 is with the artificial intelligence, is the big player, big tech. That's where all the money is. So keep in mind those sectors, those Magnificent 7 was pretty much leading the overall market. But if they are having a pullback, that's okay. But on the long run, I do think they're gonna still lead the market with those great projects that they have. So the second one was Nvidia. Nvidia did it great with a chip. It's a big player also, and we also have to consider the big player Nvidia. I don't know which number. Here, number 8, Nvidia, $490 per share, and we at $1.2 trillion company. So it's number 8 of the Magnificent 7. And we got Aaple. How did Aaple do it? Aaple was pretty much not good because they've have bad earnings and such things. So, but keep in mind, when those Magnificent 7 are basically cooling off and coming down, I'll buy more shares. But they first have to get to a point where they are reaching a support level, and then I will buy more. That's basically what I'm doing, because I do believe in the Magnificent 7. They are the world leading companies, and we have to acknowledge that. So my next subject is Coinbase. Coinbase also did it good. Mara, we got Coinbase, we got Mara. They all did it good. Coinbase had basically made a run, and everyone is thinking that Coinbase, me also thinking that Coinbase is a big player, talking about the whole Bitcoin ETF. But it had a run. It had a run until 189, and it cooled off almost back to 146. So, and one of the big player that I'm also betting my money on is Mara. Also had a cool down, but it made a great run. It had a great run of, let me see. It's not off for year to date, but it's had a great run. So Netflix also did it good. It was up here, top 5, but I'm not pretty much a big fan of Netflix at those high prices. I need Netflix to come down. But Netflix pretty much did it good because of their new password policy. Everyone was sharing their password, and they were like, yo, we ain't gonna do that. We're not gonna do that. So they're like, yo, we have to cut off those passport policies, and everyone have to create their own account, and that was money in the bank. So that was a good decision of Netflix. So the Fear and Greed Index, that's something that I want to share with you. As I said, last year, hectic, Magnificent 7 did it great. Inflation was high. Federal Reserve had won. So now we're going back to normal again. We're shifting to another sectors, energy, health, and that kind of stuff. The Fear and Greed Index is around 74. There was an extreme greed. So I think we're going back to normal. Gonna see what we're gonna continue. We still have to see what the dollar's gonna do, but it's very interesting to see what's overall shifting. So as I said, big tech earnings basically drove the market, and that was the reason why everything went up. Yeah, we currently have 5.5 for the interest rates. So now that interest rates is coming down mid 2024, but we have to still wait what the Federal Reserve is going to do. But that means that everything's going back to normal, and we could invest our money in some other things, and those are those healthy utility financial stocks. That's what we can invest our money on. And when we're talking about health, we're talking about those big players. We're talking about the Lilly's, the Johnson and Johnson. And when we talk about finance, we talk about Bank of America, Wells Fargo. And when we talk about health, we talk about UNH, CI. Those are those big players. And when we talk about utilities, where you at? Energy, we talk about NWE, D. So everyone is seeing where the money is flowing to, and think that energy is the next player because energy been doing it. So let's go to energy, green of energy. So these are those big players what everyone is talking about. We got NWE, Nextra Energy. We got Devon Energy. We got Gortra. So a friend of mine did research and is investing in those companies. So this is a chart of a friend of mine, and he said that we're basically gonna shift to energy. He's thinking about Cortera, Devon, Exxon, High Peak, and those are those companies that he basically invested his money on. And High Peak Energy, I gotta put High Peak Energy up there. So these are the companies where he basically is putting his money on, and he'd be like, yo, this is where the money is flowing to. So a big lesson of 2003 was don't follow these big players. Always invest in yourself and do your own due diligence. And now as everything is going back to normal, so we could see a lot of money flowing to energy stocks and utilities. So this is the second time I made this video, so I'm not pretty much encouraging anymore. I hope you learned something today, and keep your eyes on the money. And I leave you guys with this chart. With that being said, short video, and I'll see you guys on to the next one. Bang, bang. Peace.